Hey everybody, Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on euro currency. So by today picture, we could see that our suggestion and decision to wait a bit and see what will happen around crucial 116 area was correct. Because this time we have at least some patterns and we have some trading stops and scenarios for discussion. In fact, these scenarios are bullish. The grabber that you could see here on the daily chart also present on the dollar index. You can see it also stands here. So at least it's something. Currently, actually, guys, to be honest, it's absolutely crazy situation in the markets. All markets stands in fever due to the total political jeopardy that stands in the world. So you can see what's going on around. It's total madness. And in the current situation, it's very difficult, of course, to prepare some 100% plan, but at least we will try to do all the best and minimize the potential risks that we have. So what we have, as I said, market still stands around the confluence, and we have the grabber. Grabber itself is a bullish pattern, and it suggests taking out of the top. So another attractive point here is that, take a look, it's a very small candle, and invalidation point of this pattern stands right below the lows. So if market today will close below it, grabber will be erased, so we do not need to hide too far standing stop. That's what we have on the daily. On the 4 time frame chart, there is a nuance. So if you remember, yesterday we said that here, take a look, it might be the situation for Jordan patterns, either bread and butter or double repo buy. Since we have the grabber, and with this retracement, market has not reached the 30% resistance of the whole downward action, stands probably slightly higher. This is the background for a possible double repo. But the question here stands with the lows that will be formed with the second bottom of the double repo. Because if we will see slightly deep downside action, the grabber that has been formed here will be under question. At the same time, if market, for example, forms the double repo here, and by the end of the session returning back up, we could get another one right there. So for instance, it might be the same spike down, right? And return back and close above the MACD, so we could get a second grabber. How we could deal with the current situation? Most conservative approach is, of course, just to wait for this type of action and close above the moving average to confirm the double repo pattern. But at the same time, the difference between the first scenario and second scenario, so first is just based on the grabber that we already have with the stops below this area, or if market will drop slightly lower, start forming double repo, it's very small. In fact, the distance between these two areas, you can see it on the hourly chart, stands approximately around maybe 20, around the 20 pips. At the same time, here on the hourly chart, around the OP area that we discussed yesterday, so ABCD pattern is completed, we have the agreement support, something like hand shortness starts forming, right? And market stands at the point where potentially might be the right arm bottom. If double repo starts forming, of course, this hand shortness will not be formed, so market will just keep going lower and then return it back up. It mostly will be kind of the double bottom. But at the same time, we don't know that, whether this will happen or not. So this is a decision that you will have to make. Either you take position here based on the grabber that exists and based on this possible hand shorts with a possible upper continuation, right? Or you wait for further progress. Maybe market will just form another bottom here. Otherwise, you're waiting for a confirmation of the double repo pattern on the 4 time frame chart. That's two different scenarios that we have. They are not mutually exclusive, so you could split your position in parts. For instance, to get insurance that you will be in the game, if hand shorter starts working, you could take some part of your trading line here. If double repo starts forming, you will add more when it will be confirmed and take the whole position somewhere in the confirmation of this. Because anyway, in the current situation, the stops will be somewhere below this area. Maybe you could place it initially somewhere below these lows. That stands on the daily chart. This will be probably more reasonable in the current situation. That in two words what we have. But in general, you could see that some preparation to upside reaction exists. We have grabbers across the board. We have on the daily and the hour. The same we have on Dollar index, by the way, if you take a look at the daily Great British pound, you also will find here even two grabbers. Yesterday and another one is forming today. It has the same target above this area, so suggests a probable upper direction. Risk reward once again here is rather attractive, so you do not need to place too far standing stops. Choose the asset that you like more. If you like more Great British pound, be my guest, so it might be used on a dollar index, on euro currency, wherever, because shape in general everywhere seems very similar. So that's probably enough for me on euro currency. Let's see what will happen. Hopefully this stuff will work nice and return back to this subject tomorrow. Today we also will consider in the second video, as usual, the gold market.